we have a good amount of individuals, so I think we'll start off with some introductions. So I want to thank Donna and both Joy for being here today and giving our participants some needed knowledge on what's going on with this whole COVID. The idea of the webinar is obviously to talk about the bounce back and dealing with the financials aspects of it. However, we've already had some questions with regards to opening common areas. But before we go into it, if Joy, you'd be so kind to introduce yourself, say a little bit about yourself and the firm.
Yes, good afternoon, everyone. It's a pleasure to be on today and to talk to you a little bit about how we think associations should be dealing with any sort of increase in collections or delinquencies that they may be having in their community. To give you a little background on myself, I have been with the firm for approximately 11 years, and I'm the managing shareholder for the collections foreclosure practice group for the entire state of Florida. So we've had a lot of experience in dealing with these types of issues, both from the Great Recession and then also as we've seen things kind of go up and down in the last, 5 to 6 years. So I'm very happy to be here today, and I look forward to giving you all some suggestions and strategies that you can use moving forward.
Great, thank you, Joy. Next up, we have Donna Berger. Donna, if you want to say a little bit about yourself and the firm as well.
Of course. And you know what? I'm going to start, and I'm going to use my full name, Donna DiMaggio Berger, on the off chance that my parents are watching this. I'm a partner in the Community Association Practice Group at Becker. I'm a transactional attorney, so unlike my colleague Joy, I handle general corporate representation for associations. Typically, that involves legal opinions and preparing amendments and reviewing contracts. But as I'm sure you can imagine, my phone's been ringing off the hook for the last 9 weeks. And the predominant questions are COVID-19 related. So super excited to be here. I should mention I'm a board certified community association attorney, if that means anything to anyone listening. And I'm sure we've got a lot to talk about over the next hour. So thanks for having us, Raphael.
No problem. Thank you, Donna. And myself, my name's Raphael Aquino. I'm one of the co-founders of Affinity Management Services. We are an association management company. We service from Palm Beach down to Monroe County. And I'm here today to help answer most of the questions that have come up and hopefully get the assistance of Joy and Donna to answer those questions that we may not have the answers to. So without further ado, I guess we'll start with the first question. The idea of the webinar is to go over the finances. However, we've had a ton of questions come in via email prior to the webinar with regards to opening of the common areas and especially the pool areas. So I think I'm going to start with you, Donna. I know this is your area of expertise. I know you've done tons of webinars with regards to this topic. But if you could give us a little bit about what your opinion is when it comes to opening these pool areas. I know we're dealing with 3 different counties, at least for us, and there's different regulations coming from each one and different things coming from the different cities. So if you can touch up a little bit on what your recommendations are and what these boards and management should be doing.
Sure. Well, for everybody listening, I want you, first of all, to consider that these local orders, whether it's your municipality or it's your county, they represent the floor or the minimum of what you as a board should be considering when you're discussing whether or not to reopen your pool deck, and ultimately all your amenities, whether that includes a gym, outdoor tennis court. So you have to understand that these orders, whether, we were talking today about the Tri-County area, Broward, Dade, and Palm Beach. There's a lot of questions. There's a lot of gaps in these orders. They're not going to answer all your questions. You can pick and choose from them, but certainly your board is the most local government as it pertains to your residents, and you may decide that you need to have more stringent protocols in place than even what these orders are offering you. So that's the starting point. You are not required to follow these orders exactly if you want to be more stringent. Now, if you want to open your pool, you can't fall beneath the floor. You can go above the floor, you can go up to a ceiling, but you can't fall beneath the floor. So if we could take a moment and just talk about pool and pool deck, because that's what most people want to know about. If you're in Palm Beach, that order said that the pools shall reopen, subject to certain guidelines and requirements. The Broward order said pools shall remain closed unless you open them, and you can do so subject to some requirements. So it's kind of semantics there we're dealing with. But in both cases, Broward and Palm Beach, we have some pretty stringent requirements that your board must follow if you're going to open. So the first answer I'm going to give you is, if you can't meet these requirements, you should not be reopening. And those requirements include in Palm Beach, you need to have reduced capacity. You need to have somebody monitoring the pool and the pool deck to enforce social distancing. You need to have your shower facilities closed, and you need to have somebody cleaning. And I get the question all the time, Raphael, well, we've got the manager in the office and there's a video camera. Is that monitoring? That's not monitoring. That is not what Palm Beach contemplated. And actually, we reached out, and Palm Beach County officials clarified, and basically they pushed it right back on the volunteer boards and said, folks, if you can't properly monitor these pools, you should not be reopening them. Another question that came out was, okay, we didn't have in our budget, and I'm sure Joy's going to talk about this later on, we didn't have in our budget a line item for somebody, for a pool monitor, for somebody to sit there all day long and monitor the pool. Could we use volunteers? Can we use board members to do this? Palm Beach has actually clarified and said, sure, but you still got to make sure you're complying with our order. If you're asking me if I think it's a good idea for a volunteer or a board member to be monitoring the pool, my answer is a strong no. This is not like a volunteer who's planting daisies in the green areas. This is a volunteer who there is a very high degree of likelihood that an altercation or at least a dispute could occur if they have to go up to people and correct their behavior. We all know how much people like to be corrected. So I would say, number one, if you're going to use volunteers, you better contact your insurance agent and see if you've got coverage. But I don't think using a volunteer, an owner as a volunteer, or even a board member is a good idea. If you're going to reopen your pool, you're going to want to make sure you've got professional staff to monitor it, which for many communities means you don't necessarily have to reopen 7 days a week, 10 hours a day. You may want to start out 3 days a week, 4 hours a day, see how that goes. You're looking at our counties and our cities, everybody is engaging in a phased reopening. Nobody in our counties or cities has flipped a switch and we're back to January 2020. This is the same mindset our volunteer boards, even though your people are pressuring you, and God bless you for resisting the pressure, this does not mean you need to go back to business as usual 7 days a week, 8 to 10 hours a day. It's baby steps.
Correct. I mean, we've had, from at least our client perspective, it's been a bit of a mix. So we have boards that completely understand and say, listen, it doesn't make sense to open the pool. We're not going to be able to meet the guidelines. But then on the other side, you have board members that just want to open the pool. When it comes to those kinds of situations, for those that really want to open the pool, Donna, and they have the right to do so, we're recommending to have some rules in place. What steps do you believe should be taken for those boards that really do want to open the pool, and even though they're meeting certain requirements? Should they be passing any particular rules?
Sure. Yeah, well, a couple things. I know everybody wants to reopen the pools, but you also have to take into account your particular challenges in your community. Are you a 55 and over community, or another community where you have a particularly large percentage of your residents who fall into the vulnerable demographic in terms of potentially acquiring this disease? So that's number one. If you're 55 and over, or you have a vulnerable population, that is certainly a factor you cannot avoid factoring in. If you have a confirmed infection, Raphael, I just had a client that had the pool open because they could. They were in Broward County. They limited guest usage. They, took all the pool furniture away, and they told people, bring your own furniture down. They just had a confirmed infection yesterday. That person was at the pool last week. That pool's getting shut down again now as a result. If you know you have a confirmed infection, that's another factor that needs to go into it. But in terms of your question on the rules, yeah, absolutely. The rules, some associations are actually saying, we're not going to put out the furniture, bring your own, and then they're marking out on the pool deck where the chairs need to be, where they need to be placed. They are prohibiting guest usage. In Broward County, you have to do that. In Palm Beach, you don't have to, but you probably should limit guest usage as part of your phased reopening. And of course, they're jumping on, or should be jumping on, any violations, because that can get your pool shut down real quickly. And again, you don't want to be operating beneath the floor. If you can't manage having that pool and pool deck open in compliance with the orders, it shouldn't be open, because it's very clear that the liability, the potential liability, rests with the board, not with the owners. Even if you attempt to say, hey, we've got signage posted, swim at your own risk, that's not going to protect you in the event somebody acquires a communicable disease at the pool.
Correct, correct. No, and you've been hearing all kinds of things. I've heard recently, I don't know if it's a true statement yet, but there's certain large firms already looking at this kind of situation and seeing who's opening, what they're doing, so they can potentially put some kind of class action lawsuit. So, you know, it is scary. I think it's better to err on the side of, you know, being cautious to avoid these kinds of potential issues. And at the end of the day, we have to remember that a lot of people, they were saying 50% are asymptomatic. So you'll never know. They may not have a fever. They may not have anything, but yet you're opening the pool area and you're impacting the entire association.
Well, Joy's the litigator, and she's going to tell you about interrogatories. But I'm already looking at the interrogatories. Oh, you opened the pool. How many days a week? How many hours? Did you have a monitor there every day for every hour? I mean, I'm already seeing them in my mind. And the answer to why you opened in the midst of a pandemic cannot just be because we were getting pressure to do so. You have to have a good reason. The answer needs to be the county permitted us to do so, and we reopened in strict accordance with those county guidelines. If you can't answer that affirmatively, you shouldn't be reopening.
Correct. Have you seen, Donna, at least from your side, have you seen a lot of your clients reaching out to create these rules and taking that step? Because, you know, we're trying to explain to our board members that these are business decisions that you have to make. You know, you have to work with your partners here. I know from a management side, we're doing our best to keep up with all the updates that are coming along. To, you know, Miami-Dade gave the new normal draft, and it's about 183 pages. Are you seeing a lot of your clients reaching out and really taking that step of getting the proper advice that's necessary?
Yeah, I am really proud of our firm clients, Raphael. They, as I said, our phones have been ringing off the hooks. They got early on, they worked with us to create COVID-19 emergency plans. So while we're in the process, you know, weeks ago, they worked with us to create those protocols, to have the foresight to say what needed to be closed early. And now they're working with us on revising those protocols. So to the extent that they can loosen up when it comes to allowing realtors to perhaps come back in, or allowing contractors to come back in, we're now into the next phase here of revising the initial protocols we put in place. And of course, we're in the enforcement phase as well. So yeah, to answer your question, I'm really proud of our boards. They've been on top of this. And look, nobody could have anticipated serving on a board. I feel for all those new board members who got elected a month before a pandemic struck.
I'm sure they're wondering right now, what did they sign up for? So I have a question. I have a question here from one of our guests that asked, with regards to ADA and removing furniture, are there anything that they need to be concerned of?
You know, I just had that question come up in a client where it was a Broward County Association. They removed all the pool furniture, and we had a woman say, well, I can't bring my own furniture down. It's going to be the same evaluation, Raphael, as any other request for reasonable accommodation. If that individual happens to be hearing impaired, that doesn't necessarily mean that they can't take their pool chair down to the pool. So the first thing is, do they have a legitimate disability that would require assistance in the form of maybe the association sends somebody to bring that individual's pool furniture down, or maybe they leave a particular chair out for him or her. But it's going to be the same evaluation as do they really have a disability that would prevent them from taking their own chair down or getting a member of their household from doing so? And then B, is what they're asking reasonable? You know, the big fear always here would be everybody's suddenly going to say, I can't bring my chairs down to the pool. And in that case, you may have to shut the pool again. So. Yeah.
Excellent. So why don't we switch gears here a bit? And I know this is a hot topic with regards to the finances, and I know that's your area of expertise, Joy. Could you tell me what has your firm seen thus far, if any, increases in any potential collection cases? Have you guys seen any increases as of yet?
So we've actually remained very busy this entire time. I don't know and don't necessarily think it's tied to the current pandemic. I think that those effects will probably be felt in the next, 90 days or so. So I think that, when this originally started in, let's say, March, it takes, 2 to 3 or 4 months for things to really start having an effect in terms of your collections, for a couple of reasons. One, owners might not start feeling the effects themselves, but then you also have quarterly dues instead of monthly dues for some associations. So we've remained very busy, and I have to say, haven't had a lot of owners contact us and say that they have lost their job or the hardship. It's more that we have cases that are kind of end stages, and they want a little additional time because of the fact that they don't want to have to find a new place to live, let's say, because of the current, pandemic. But we're not seeing a huge increase in people coming to us and telling us that they're having hardships because of the pandemic. But I think that that's going to be coming down the pipe. A lot of cases that we already had in our pipeline were cases that, these owners had issues even before the pandemic. So I think it's going to start happening in the next, 2 to 3 months, that we're really going to start seeing an increase in owners coming to us and asking, or associations coming to us and telling that their owners are asking them for forbearance agreements or some sort of, accommodation because of the virus.
Of course, yeah. I mean, from our side, we're kind of seeing something similar. I do believe as well, just as you do, Joy, that it is going to take some time. We're on a staggered. It's going to take a little bit longer. We benchmarked February and March and April, we saw about a 1% increase. And we just ran some quick numbers, even though we still have about 15 days left in this month. But we are seeing a double, now a 2% additional this month. So I think it is going to happen a little bit later down the line. The reality is that, not driving fear, but there are 34 million people without jobs. So it's the largest ever in history. So there are going to be impacts to our industry. I just believe that we just have to strategize and take the right approach, listen to your advisors that give you the recommendations so that you do the right thing for your community. Now I'm sorry, go ahead.
No, I was going to say that's the key. Every community is different. You have a lot of communities where you have mostly retirees, so they didn't have jobs to begin with to lose. So you also have communities with families, and maybe they can work from home, or they are working from home, or they aren't able to work from home, or they were furloughed. You also have communities with, let's say, a younger demographic that are maybe in the service industry. And those are the people that I think have been hit the hardest. So I think that every community has to look at their particular demographic. And what I would really caution communities against doing is proactively telling their owners that they don't need to pay. So it's every community, listen, we have to be understanding in the current situation that some people have lost their jobs. I mean, obviously there have been some administrative orders out there where you're not allowed to evict tenants if you're a landlord for non-payment of rent. So clearly, as an association, wanting to work with your members is key, but I think that you don't want to go overboard. And so I think when you consider what it is that you should be doing, I think the two keys here are consistency and flexibility, because you need to be consistent in your collections policies and also your agreements with your owners. You can't allow one owner to do something and not allow another owner to do it. So you really do need to come up with a consistent collection policy if someone comes to you and tells you that they're having a hardship and is asking for some sort of accommodation. And you also need to be flexible and understand that, it's very likely that they will be able to have some sort of arrangement with you that they'll be able to pay, any arrearage, moving forward or, down the line. And you really just have to look at what they're asking you to do. And I also don't think there's anything wrong with asking them to show you or prove that they're actually having the hardship that they're talking about. Because I know people who, especially, let's say, since this prohibition against evicting someone for not paying rent came out, I know there are people who have decided not to pay their rent. They still have their job, they're still working, they literally have no hardship, and they just decided to stop paying their rent because they knew the landlord couldn't do anything about it. Well, that's going to come around to bite everyone in the butt, as it were. I mean, it's going to bite the tenant because they're going to have to make it up, and it's going to come back to, to bite the landlord because the landlord is in a situation where they're probably still paying their mortgage on that property. So the key here is that you don't want to proactively tell people not to pay, because if you do, everybody, or at least a lot of people, are going to take advantage of that by not paying, and then the association is going to find itself financially strapped, where they may only have a few owners who can't, remain current on their payments, and they need to come into some sort of agreement. And a lot of times with association budgets, you have a little bit of flexibility built in there. You have a little bit of extra, that you might be able to use to cover your bills, or just in general, you may have, been very financially sound in preparing for these types of things. You can weather a few owners not being able to remain current, but if you tell your owners that they don't have to pay, then it's going to go to the bottom of the bill stack, because nothing's going to happen.
Yeah, Raphael,
yes.
to Joy's point, Joy, your point is so spot on. I actually had an association where an owner asked, can you waive the assessments for a while? And the response was, but you're on a fixed income and nothing's changed. And she said, nothing ventured, nothing gained. I mean, you're going to ask, you don't want them, and this is a little bit like what we read about with a lot of companies that didn't need the PPP funds, applying for and taking millions and millions of dollars. Many of them are now giving it back, but we've got some of that mindset. And I think you just touched on it so perfectly. You want to be able to help the people who truly need the help. And if you start right out of the gate helping everybody, you're going to dig yourself into a hole where eventually you won't be able to help the people who truly need it.
Yeah, and at the end of the day, we are managing nonprofit. Yeah, we're managing nonprofit associations, so the end game is zero. So it's not like they have excess profits. Most associations, we try to make sure they have 3 to 4 months of cash flow sitting in the bank, and they really don't. So let's say they fall into a tight situation and they don't have the necessary funds. And I think I'm going to ask this to you, Donna. How would they be able to address it if they want to use, the reserve funds? What are the steps that they have to take?
Sure. Yeah, to the extent that you can reduce your burden, you said there's 34 million Americans out of work. There's Americans that have been furloughed. There is going to be a huge economic impact. We're not saying that there won't be. So to the extent that you can lighten the burden without doing any of the things that Joy is warning against, you absolutely should. And for some communities that do have well-funded reserves, those rainy day reserves, well, guess what? It's storming. So that's what it's for. But there's nothing in the emergency powers. So when I talked about emergency powers early on, or maybe I didn't, but I'm talking about it now. Your emergency powers as boards are in effect until now, July 7th, because Governor DeSantis has extended his original order that he issued on March 9th. So at least through July 7th, and I believe it'll probably go beyond that, you have emergency powers. The emergency powers were the powers that allowed our boards to be able to say, we're closing down amenities because it's too risky. Unfortunately, those emergency powers do not allow you to tap into reserve funds without a membership vote. So if you have reserve funds and you can use them and you can say to your owners, why don't we take a little bit from reserve and let's lighten the load? I have a feeling that's probably going to be a pretty popular vote and people will approve it. Just like many associations, I'm sure, Raphael, many of your communities have a line of credit. And I know a lot of our clients tapped in early and got cash because they were afraid, rightfully so, that some of the banks may freeze the lines of credit if too many people were drawing on them. I don't think that happens. So I think if you do have a line of credit, you could tap into your line of credit. I also don't think it's too late to get a line of credit if you need one right now to help you. So there's a couple different things you can do.
Right. No, and that's an excellent point, Donna, with regards to the line of credit, because we have been able to help several associations. And, the best way of working it for those that haven't is to try to work it something similar to a construction loan, where you're drawing upon it and you're only really paying interest payments. And then at one point, you can convert it into something that'll amortize over X amount of years. so that way the impact right now is gradual, not all at once where you're paying that interest, because obviously you probably didn't have that line of credit budgeted within your association budget.
And one more thing, Raphael, this may not be the time to pass a $5 million special assessment to redo the lobby, okay, where you're piling on. So don't be tone deaf, be a little sensitive to what's going on. Let's wait a few months as we get through this, and we'll see what the full economic impact is. I'm really urging my clients, if you don't need to undertake certainly 40-year cert work, necessary life safety work, necessary maintenance and repair projects, absolutely. But that discretionary lobby project, maybe this is not the right time to pass that assessment.
I would totally agree, unless it's like an emergency for a cooling tower or something. So
there's no emergency new couches.
No, well, it depends who you ask, right? Now, we've had the question asked 1,000 times, and we've answered it, but I'd like to get your opinion on it of hey, we're not using our amenities, so we don't want to pay the portion that goes to the maintenance of the pool or the maintenance of the gym and so forth. Joy, I guess maybe what's your opinion on that?
Sure. Well, the payment of assessments is not tied. There are two different things there. So the owner's liability to pay for assessments is not tied to whether or not the association is maintaining the common elements. That's not exactly what you just said, but it does, it equates. So the owner's responsible to pay the assessment by virtue of their ownership of the property, and as long as the assessment was properly adopted by the board. And we're talking about regular assessments typically here, so those were passed in the annual budget. And so even though they can't use the amenities, the association is still maintaining those amenities. They're still maintaining the pool, they're still maintaining the gym, meaning, it's the only reason they're not being able to use it is because of what's currently going on. And you can't parcel out that portion of the assessment that goes to that, particular item. But there's case law that's very clear that the two things are not tied. So the issue with the assessment, is the liability for it is by virtue of your ownership. Doesn't matter if the common elements are being maintained or if you can or cannot use them.
Of course. So they don't have the option to do that now. Let's say that they want some kind of assistance. What do you recommend when it comes to payment plans? Or if they actually step up and say, listen, board, I'm having a difficult time. You mentioned earlier about providing some kind of evidence. What kind of evidence would you request?
So I think that, something that could be requested is something showing that you've been furloughed, something showing that you're pulling unemployment versus your regular paycheck. Some people that have been furloughed are still getting their paycheck, with the loans that were given. Those loans were given with the intention of you keeping your employees employed, even if they weren't actually working, right? So I think that, asking for some sort of proof of that is not unreasonable, okay? I also think that when you're coming up with some sort of a collection or some sort of plan to deal with the delinquency, there are a couple of ways that you could do it. If you have quarterly assessments, perhaps instead of requiring them to pay the full amount on the first of the month of the first month of the quarter, you could allow them to make monthly payments as long as the last payment was received on the last month of that quarter. So you could have them spread the payments out. One thing you could do. Another thing you could do is you could come up with some sort of, even if they couldn't, if it's a monthly assessment, even if they couldn't pay the full amount, then you could kind of structure it a little bit. Okay, like for example, 3 months, we'll allow you to pay X amount, which is not the full amount of the assessment. And then in 3 months, you'll need to, make up the remainder, or, you'll have to start paying the regular ongoing amount in 3 months, and then we'll give you an additional 3 months to make up the amounts that you weren't able to pay for the last 3 months. There's different things you can do, but the key here is that if you offer it to one owner who comes to you and asks for it, you have to offer it to another owner. And this really comes into play is if you have an owner who's been habitually delinquent or behind, okay? Yeah. Even so, we're dealing with a different thing here. We're dealing with, the issue with, with COVID-19. And if they can show that I lost my job, I know I was already behind, I know it didn't have anything to do with that, you still need to work with them in the same way that you would work with an owner who never had a delinquency prior to COVID-19. Because the biggest thing we find when it comes to defending these types of collections actions or lawsuits, you never want to have to, I never want to have to go in front of a judge and explain why, the person who lives next door to the board president got this deal and the other guy did not, right? Even if there are reasons, as a board, you have to understand that strategically, there are reasons why you need to treat everyone the same. There's actually, case law and selective enforcement, which kind of comes into play here if you're not treating all your owners the same. But I think also to kind of talk about these types of arrangements, you have to have some kind of arrangement, okay? I don't think that you should just say, it's fine if you don't pay for 3 months and then you can start paying again. No, you need to have some sort of plan in place. And as an association, you can come up with a policy or a general idea of what you will agree to. But then I would recommend that your attorney actually draft that and have the owner sign it, because then the owner understands if they default on it or if they can't follow through, that there will be consequences, and the attorney already knows about this. So I would definitely recommend doing that, and I don't recommend allowing an owner to just not pay you for a specific amount of time.
Of course. Now it's been our approach to follow what the collection policies are within the association documents. With regards to that, Joy, would you say that should be somewhat lenient or just stick to what the collection policies are within the documents?
So I think that it's important, kind of going back to what we initially talked about not proactively telling your owners that you won't, that you're going to forgive assessments. I think it's important to follow your collections policy unless an owner has proactively come to you and told you that they're having a problem. So if you have an owner who's delinquent, not had a conversation with them because they haven't come to you and said anything, if you have a policy of turning the account over to the attorney if they're delinquent for 60 days, turn the account over when they're delinquent, all right? And then what will happen is if they get the letter from the attorney and then they contact us, tell us that they're having a hardship, that's when you want to work with them. So I think you want to follow the policy that's in your documents. You need to follow that unless you've been proactively approached by an owner who has an issue. And the other thing I wanted to talk about briefly is a way that you could try to help your owners is to temporarily perhaps waive interest or late fees that you might otherwise be collecting. But you need to do that across the board. So if you have an owner who pays, on a regular basis, but they pay, let's say, on the 20th of the month, and your late fees are on the 15th of the month. If you forgive late fees for a 3-month period, let's say, you also need to forgive that owner who is paying on a regular basis, but paying late. Again, it's all about consistency. But if there are things that as an association you feel you want to do to not penalize your owners who are having problems, then you just need to make sure you do it across the board.
Okay, excellent. And with regards to timeframes, because I know we had one request this past week and the person was already requesting 24 months to pay it back. And, our out of the gate response was that's not going to happen. What would you say is a decent recommendation right now in the situation that we're dealing with? What would you say is the max time? I know every association is different and their economic position is different, but you mentioned of doing 3 months with certain terms and then 3 more months. What would you say is like the maximum that at least your firm would do in cases such as these?
We don't really have a maximum. Most associations, I work with associations on what they want to do from that perspective. I think that, depending on what the debt is, okay, if it's huge, obviously you might want to consider giving someone a little more time. But a lot of associations that I work with have a policy of 1 to 2 year payment plans. So, and it also depends on what this particular owner's situation is. If this is an owner who did not have any delinquency prior to coming to you with this hardship issue, then I think it's very reasonable to say, for the next 3 months, we will allow you to pay, X, it might not be the full amount of the assessment. And then in 3 months, you have to start paying the total amount again. and this is how you'll repay the amounts you weren't able to pay. If you have an owner who hasn't been paying for a long time, and they come to you and you already, let's say, have a collections action against them, and the board is willing to offer them the same sort of scenario, then you might need to consider allowing that payment plan to go on for a little bit longer once, you know, you reach that 3-month mark where they start paying the ongoing in full, because of the fact that they had such a big delinquency to begin with. So you kind of have to take it on the facts of each case. Again, applying it consistently, and that's kind of the key there.
So Raphael, if I could jump in for 1 second, to what Joy is saying, listen, we always assume that the current collection policy is really strict, but it's my experience that sometimes the collection policies are actually too lax. And if you know you're going to have a number of upcoming delinquencies, you may want to revisit it. You may not want to send out 3 late letters before you send it over to the attorney in some cases. And if you've decided to waive late fees, Joy, I would imagine, like I know some people send out 2, 3, even 4 letters where they keep saying you're going to get a late fee, you're getting a late fee, you're getting a late fee. If we're waiving late fees, then why are we sending out 4 letters to that effect?
Yeah, and that's a really good point. So what we found with our clients is after the Great Recession and after the debacle of, you know, their finances being in the toilet, a lot of them really tightened up their collections policies. But there were some associations that maybe didn't go through that crisis for whatever reason, which is amazing, but they are out there. Then they may not have, you know, revisited those policies. We find that our clients who are proactive and send us files after 30 to 60 days of delinquency are the ones that tend to have the best financial health. You know, it works both ways. You know, it's hard for an owner to catch up if you wait for a year to send them a letter letting them know that they owe a year's worth of assessments. If you send them a letter after they owe 30 or 60 days, it's a lot easier to catch up there. And so I would definitely recommend, you know, not waiting to send people to collections, and you may want to revisit the policy, like Donna said. You know, it's always good, I think, for the management company to send out at least 1 letter, kind of notifying them that, hey, you know, you haven't, you know, remitted your payment for this month or this quarter, so we're going to send you to the attorney if you don't, you know, send in the payment. But I don't think you have to send multiple letters, and I wouldn't recommend doing that in general. I think it's kind of like a boy who cried wolf scenario. Like they're just going to continue to think that you're just going to continue to let it go.
Of course, and also an important point to keep in mind is that if the units are rented, especially since, you know, the last economical crash, most condos, at least what we've seen, they're in the 40% rental, unless you're a non-rental building. You have the ability to be able to collect from those tenants should the owner not pay. So the minute they stop paying those maintenance fees, if you have the contact information for that tenant, I would already start sending the letters as well to that tenant so they can start paying the association, because, you know, it's your fiduciary duty to make sure the cash flows for your association are strong. I know I've had the question in the past, and I see it here, is if there's a board member that falls behind, and obviously with they go past 90 days, they're no longer on the board. What's your take with this whole COVID thing? That remains as well?
Yes, I think it does. I mean, that's the statute says what the statute says, right? You don't really have a lot of leeway there. However, you know, there's always room to come up with a creative solution. So if you really do have a board member who has always been current, they lost their job, they're having some sort of difficulty, first of all, if you are able to enter into an agreement with them, some sort of payment agreement, they're no longer considered delinquent, okay? Having an agreement as to how you pay the assessment, okay, is not the same as being delinquent by just not paying it all and having no arrangement. When we enter into a stipulation for settlement with someone, an owner who's been delinquent, they're no longer considered delinquent as long as they remain current on that payment plan. So that's one thing. The other thing is that, and Donna was mentioning this, we kind of spoke about this a little bit before the call, is that, you know, many times you can have appoint, you know, people to help you with the board work. And so if you do have a board member who is 90 days delinquent and you have the ability to appoint, you know, officers or assistants, then you could use them in that manner as well.
Excellent. And I have a question here from a gentleman named Paul that he's asking if the late fees are being suspended, let's say they're suspended for a month, should they announce that to the public or whatever particular plan they're doing for each member? Or let's say they're doing a waiving for certain individuals, should they publicize that information?
So I'm a little nervous about publicizing it because I think that's going to lead to other people not paying on time. But I think the key there is that if, you know, you just, the management company or whoever keeps the ledgers just needs to know that no one is going to be charged a late fee for that particular length of time. Okay. And so I don't know that you need to publicize it. But as long as you apply it consistently, there's really no need to publicize it. Because again, it's the same thing with the publicizing that you're going to allow people to enter into agreements because they're having a hardship, right? You don't really want to publicize it, but you just want to be consistent in applying it.
Yeah.
Although you may have inadvertently publicized it because presumably you made that decision at a board meeting. You haven't just had one board member who says, all right, I'm waiving late fees. You've had a discussion at a board meeting, I hope, and your board has discussed waiving late fees, and that's going to be reflected in the minutes. So I agree with Joy. You don't need to post it on the bulletin board. Right. And we know that board meetings are not well attended, or actually right now with the Zoom meetings, I've got one tonight, they're getting more popular. But yeah. So I'm saying is chances are, though, you've got to make that decision at a board meeting anyhow, and whoever was listening in will hear that decision to waive late fees.
Of course. Now, Donna, I have here a savvy member that's questioning me with regards to collecting from delinquent unit owners. It says, what happens if the documents don't contain the Kaufman? They didn't say Kaufman, but the as amended from time to time language. Can they still collect from that time?
Well, yeah, I mean, listen, I've never seen in 25 years a set of documents that doesn't give the association the right to lien for non-payment of assessments. The Kaufman fee share language comes from a case which says that unless your documents are subjected to the statute and you've got what's called magic language as amended from time to time, you could be subject to the 718 or 719 or 720, the version of the statute that was in place at the time your documents were created. So I don't see that Kaufman language really impacts it doesn't impact your ability to lien. You're still going to be able to collect, whether or not you're going to have that application of payments language. Joy, I don't know when the application of payments language came into existence, and I don't know whether or not that would be treated as procedural or substantive, because with Kaufman, you're kind of hamstrung with regard to substantive changes in the statutes if you don't have that language, but you can take advantage of procedural changes even without the Kaufman language.
Now, I think I may have posed a question incorrectly. It was more towards for the collecting from the tenants, from the tenants that aren't.
Oh, well, Joy, what's your position on that? Procedural or substantive?
I think it's procedural and it's not retroactive. You're only doing it moving forward. I mean, the whole procedural versus substantive argument, that's always a real brain teaser, no matter how you look at it. But I think it's more procedural, and I also think that it's not retroactive, so you're not going back, you're just looking forward. But this brings up a really good point that would completely answer the question and solve the problem to begin with, which is that a lot of times associations, if they allow rentals in their community, they can require a tenant to sign an addendum to the lease that says if the owner is delinquent, they're entitled to collect the rent. So that's something, honestly, that I would recommend every association do when they allow for rentals. I personally rent my property right now. I'm renting, and I had to sign an addendum that said that. And as a lawyer doing what I do, I was like, well, that was very smart of them, and so that is a way to solve it altogether, so that way you don't have to worry about it. But I have to tell you that I've never had anyone raise that as a defense to a tenant rent demand letter. But creative minds like to raise creative arguments.
Well, to Joy's point, shameless plug for my department, which is community associations. Many of these questions, Raphael, that are cropping up, like, can we assess for the cleanup costs if we want to allow people to move in and we want them to pay to clean out the elevator or the corridors? yes, we can amend your documents to say you can specially assess, and then goes over to Joy's department and she collects on that. This is a great time to think about amending your documents, to adding in some of the protections that this crisis has revealed.
Correct. No, and now more than ever, now people have completely adapted. The people that always said technology, I don't know how to use it, they've quickly adapted. And you're seeing everyone. I mean, this is how you have to speak with your family, with your friends nowadays. So if you ever wanted to amend or use technology to take advantage of it, now is the time to do it. We have a question here from an owner, Donna. I think I want to ask this to you. There's a management company that wants to do the cleanup work on behalf of the association. And they're basically stating that, do they have to allow the management company to do it because the management company wants to do it?
No, you don't have to. Again, look at your management agreement, but hopefully you had that agreement negotiated and heavily vetted. But unless the agreement absolutely requires you, and I can't imagine, because none of those management agreements contemplated a pandemic, the answer is what makes you comfortable. I know a lot of management agreements require the manager to serve as a GC when it comes to post-casualty repairs. The reality here is, I wouldn't be in favor of that, and I'm going to tell you why. It's circular. Your management agreement requires the association to indemnify the manager, in many cases, for the manager's own wrongdoing or negligence, even sometimes gross negligence. So no, I think you're better off when we're talking about sanitization practices, Raphael, is that the question? I think you're better off getting a company in there, a ServPro, one of those companies to come in, make sure that contract has them covering and indemnifying the association.
Sure, and I would agree 100% there, Donna, just because there's been so many people that have pivoted into this industry of cleanup. I mean, you have pest control companies, and you want to make sure whoever you're using to do that cleanup work has the proper licensing, using the proper chemicals that are FTC.
The CDC, Raphael, just released very specific guidelines regarding sanitization. So yeah.
Yeah, and now when we were mentioning with regards to the emergency powers, how much power does the board have with regards to, let's say, pulling the line of credit? What steps do you believe they should take should they decide to do a line of credit to help them get through this?
Well, the emergency powers are not unlimited, and we have to understand that those emergency powers were crafted as a response to our 6-month hurricane season here in Florida. So they're not exactly a great fit for some of the things we're dealing with. And again, getting back to amending the documents, I would strongly urge every board member listening to this webinar to consider having your association attorney incorporate emergency powers into your documents on a going forward basis. That way we don't have to wait and see when the state of emergency ends at the state level. It'll be in your documents, and you don't have to deal with that. In terms of a line of credit, the emergency powers don't address that. You're going to have to look back at your board, at your governing documents, and see what constraints you have in terms of obtaining a line of credit, and you're going to have to follow what your documents say. And this is why it's good to have this stuff in place before you need it.
Correct, totally, yeah. So basically the emergency powers, and I want you to reiterate this because I know we've had several calls on that. So if there is a vote required to be able to borrow any money, your statement is that they do need to follow the documents. The emergency powers don't give them that right.
Here's what emergency powers right now are going to let you do. To Joy's point about helping that delinquent board member, it's going to allow you to appoint somebody as an assistant officer. It's going to allow you to conduct and call meetings with as much notice as practicable. Meaning, if you've got an emergency and you can only give 5-hour advance notice, emergency powers allows you to conduct that meeting with only 5 hours advance notice. And the most important emergency power as it pertains to this pandemic is the ability to declare portions of the property off limits to residents, guests, tenants, and invitees. The other emergency powers are moving the association's official office and things like that. Things that aren't really pertinent right now.
Correct. And now with let's say with the opening of offices, I mean, we're getting that question right now. We're limiting the visits. It's either appointment only, and now we're kind of moving over to appointments via Zoom for the residents. What's your take, Donna, on the management office and what steps the board should be taking? trying to protect the managers and its assistant managers and so
It's crucial. It's crucial to keep your management professionals healthy. Okay. I know a lot of residents love to come and hang out and chat in the office. You know, I think the new norm should be that's not the case for a couple of months. And frankly, if I ask my management friends, they'd say, "Can that not be the new norm? Could that be the new norm forever, indefinitely?" The reality is, you've got a lot to do during the day. It's better off to continue on with a system of appointments. If somebody absolutely has to come in, phone calls and emails, but to have an open door policy right now, look, we're still in the midst of a pandemic. I mean, I'm sure we're all looking at the numbers. The state of emergency is in effect until July 7th. That's the state of emergency. All of our local states of emergency, particularly in the Tri-County area here, are still in effect. This is no time to be throwing open the doors to the association office because it is so crucial that you keep the people who are operating your building healthy.
Correct. I couldn't agree with you more. We've had the experience where a manager has been sick and having that manager not at the property, the regional having to support, you know, it's very difficult. You become short-staffed quickly should you not be following those protocols.
Especially if you want somebody monitoring the pool 24/7.
So with regards to the monitoring of the pool, actually, we have another question here that they're asking if they place their janitorial or maintenance individual to clean the pool and they were to get sick, what kind of liabilities could the association be looking at?
Well, you know, you're talking about OSHA regulations now. And by the way, Becker has an excellent labor attorney. You should be reaching out to your labor attorney if you, the association, are the employer. Look, the bottom line is you need to make sure that your employees are comfortable with the roles you are assigning them in the midst of this pandemic. And I'll give you an example. For our people in some of our communities that had to self-quarantine, either because they came down from New York or New Jersey or Connecticut, or because they had an infection, a confirmed infection in their household, many of my clients had to assign staff to go dispose of their trash, pick up of their trash outside their door, had to deliver mail, help those people so they were complying with the quarantine. You can't send an employee, you have to ask the employee, are you okay, are you comfortable with this position? As long as the employee is saying that they're comfortable, but to do that and force an employee and make that employee feel like they have to take that risky role, that's a problem. And again, I would urge you to speak to your labor attorney and see what can be done if you, the association, are the employer.
Correct. No, and at the end of the day, when you're doing that, when you're repurposing those employees, it becomes, you're falling short somewhere else at the end of the day, because if the person was cleaning the building, then when you're going to fall short in cleaning the building, cleaning the common areas and whatnot, becomes very challenging. So we're coming up close to the end of the webinar. Joy, is there anything that you want to highlight that maybe we may have missed?
No, I just want to reiterate, you know, what I had indicated at the very beginning. Again, your entire focus should be on consistency and flexibility. Don't do anything different than you normally do in terms of turning someone over for collections if they're delinquent, and don't publicize that, you know, you're going to forgive assessments. And honestly, you can't forgive assessments. It's against, you know, the statute to do so. But, you know, you just want to follow your policies. And then when someone comes to you and asks for help, understand that you need to be consistent and flexible in entering into any arrangement with them. And I think that you will see that serves you well in getting through this current crisis. And I think, you know, we will get through it. It's just a matter of making sure we don't, you know, overreact to it in terms of our financial health.
Correct. Excellent. Thank you. And Donna, is there anything, last couple points that you may want to touch on before we wrap up the webinar?
I'm just sitting here thinking back to when, the good old days when boards just got criticized for holding their meetings at the wrong time and the wrong day. And now they're dealing with just a host of issues. I would say to the board members, look, it was a thankless job before. It's still a thankless job, but you got your leaders. And I just talked about what makes employees uncomfortable. You have to ask yourselves, what's making you uncomfortable? If you don't feel comfortable, if you genuinely don't feel that you have the ability to manage reopening of certain amenities, then you need to follow that instinct, work with counsel. By the way, we haven't even talked about the business judgment rule, but I'll say this very quickly. that Florida courts give wide deference to board decisions. They're typically deemed reasonable unless they are clearly arbitrary and capricious. I can't imagine, and I'm assuming that Joy's going to agree with me, that any judge right now is going to find it arbitrary or capricious for a board who feels that they cannot manage a reopening to keep certain amenities closed. When you reach out to counsel and work with counsel and get a legal opinion on what you can do, that incorporates the business judgment rule into your board decisions. That's your safety net. Don't go it alone, and manage your, you know how we always tell businesses to manage your growth, manage your reopening.
So totally, and so just to reiterate what you both mentioned, it's very important that you lean on the partners that you're working with, making sure that you at least listen and taking the time to reach out to them. I know many times I don't want to call the attorney, or I don't want to call this person because it costs me something. Now is not the time to be doing that. You know, these are big decisions that need to be made. They need to be calculated. You need to make sure that you're working closely with your partners so that you're making the right decision for your association. At the end of the day, you're not only protecting yourself, you're also protecting hundreds of people that live in that community. And for those that are in condos, you're in such a close proximity to each other that you need to be even more cautious with what you're doing. Take the slow steps. We're going to get through this. It's only a matter of time, but be patient, because the impact could be long, could be a lot if you make the wrong decisions. So I wanted to wrap up by also thanking Donna and Joy and your team there at Becker for putting this, for helping us put this together. I also wanted to my team at Affinity for helping put this together. And more importantly, I wanted to thank all the board members and managers that attended. It really says a lot about you and the knowledge that you're looking to obtain. So we want to thank you all for attending.
Thanks. Thanks, everybody.
Thank you. Bye-bye.
Bye-bye.